We're just about ready to start the afternoon program. So if folks could, certainly can still be finishing your lunch while we hear from our next presenter, but just kind of start to get back into the mode of sitting at a table. Before we transition to the afternoon, though, I want to give some heartfelt thank yous to the different people that make this event successful and possible. And a big part of the success and I think the impact of this event is our sponsors and exhibitors. The organic community, I think, really is a community effort, and the success of organic really depends on all the players, and certainly our amazing organic farmers, but also the people supporting the organic farmers through equipment, nonprofits with their information they provide, and all the various tools that are represented here, whether it be biologicals or steel or all the different ways we manage organic. So again, a thank you to all the sponsors and exhibitors, but I specifically want to call out our wheat and oat level sponsors: Michael Fields Ag Institute, Compure Financial, Albert Lee Seed, Acres USA, Quality Roasting, NRCS, Grain Millers, Forever Green, MISA, the Midwest Top Program, AFI, Agra Energy, CFS, Full Circle Products, Green Dance Ag, Green Lightning, Buffalo Equipment, Cattlebach Flame Weeders, Iroquois Valley, Marble Seed, Minnesota Crop Improvement Association, MOSA, O-Farm, Organic Valley, SF Organics, Sunrise Foods, UW Extension. So again, thank you to all our sponsors, exhibitors. We couldn't be what we are as an event without you. Your presence is so appreciated, as well as your willingness to share all your knowledge. So a round of applause for all our sponsors and exhibitors. I also want to thank Alyssa Hartman and Artisan Grain Collaborative. We've had, Alyssa! We've had just a great partnership with AGC over the years. They do amazing work related to bring together community around food grade grains and all the work they do establishing markets and supply chains. So huge shout out to Alyssa and her team. Want to give a shout out to my team. You see many of them at the registration booth. Kelly Debbing. A round of applause for Kelly Debbing. Kelly has done an amazing job pulling this event together. Many of the speakers and exhibitors have interacted with her, but thank you to my whole crew that has helped put this together. Thank you to Monona Terrace, who is wonderful to work with, and thank you to all of our speakers. It's always a busy event season. We appreciate them coming up to be with us at the OGRAIN conference. So if, still a couple minutes early, but if Bridget is ready, I think we can launch things off. I'm going to hand the podium over to Bridget from Rodale, who's going to introduce the speakers and give us an overview of the afternoon program.
Hey everyone, I'm Bridget Gilmore. I'm here with Rodale Institute and just wanted to thank everybody for being here. This is my first OGRAIN conference. I've heard a lot about it before, and I hope it's not my last, because it's been a great experience to meet all of you. And I'm here thanks to the National Transition to Organic Partnership Program. So Rodale, we, as a markets arm of our consulting team, partnered with the Organic Trade Association to put on events like this across the country. So we're starting off with a presentation on the organic market outlook with Alexander Schultz from Argus Media. So we'll dig into some markets, trends, and risks. And after that presentation, we'll hear from John Wepking from Meadowlark Organics and Elia Romano from Albert Lee Seeds. And after that, we'll open up into a buyer-seller mixer. So as I mentioned, the Transition to Organic Partnership Program, many of you might be familiar with, is really aimed at offering resources to organic producers. And the agreement that we're a part of is focused on connecting buyers and sellers and helping to grow the organic marketplace. So if you have any feedback for how we can continue this work and in the most supportive way to you in accessing organic markets or suppliers, please find me, or you can find Will Glasick or somebody at the Rodale booth, and we'd love to hear more from you. So without further ado, I'll introduce Alexander Schultz. So Alexander covers agriculture commodity markets as a senior reporter for Argus Media. He's focused on feed-grade organic grains and oilseeds. Alexander previously worked in market analysis in the dairy industry and interned at the USDA's Economic Research Service. He holds degrees in applied economics from the University of Minnesota and Cornell University.
Thank you for the kind introduction, Bridget. Like you said, my name is Alexander. I'm a senior reporter at Argus Media. Some of you may be more familiar with as Mercaris.
So this down, just make sure. Top of the way.
Thank you. Might be more familiar with us as Mercaris, our previous name. We were acquired last year. I'm happy to be out here again. I live in Minneapolis, so nice, easy drive. I did go to the University of Minnesota, so there's a little bit of, attention, but, the axe is in Minnesota and I'm here. So that's a college football joke, if anyone didn't catch that. But that was my attempt at a joke. Now I'll move on to markets, which I'm sure you guys are more interested in. Today I'm going to walk through an outlook on, talk a little bit about demand. Then I'm going to walk through our outlook on soy and corn markets. We put out a biannual commodity outlook, so most of these numbers come from our December outlook. It's very much market in flux, so I'm going to be trying to bring in relevant issues. I will try and leave time at the end for questions. Me talking for an hour isn't very interesting, so hopefully you guys have some good questions. But let's get rolling. This is the legal warning I have to put up for the lawyers. You all read all of this already, correct, I believe? All right. So as I mentioned, this is my second time out here at OGRAIN, and I wanted to kind of start by, if you came here last year, if you saw me, I think I presented Friday morning last year, what would I be talking about? I remember as I got off stage, Dr. Aaron Silva commented something like, "Oh, I wish we would have had a slightly more positive outlook." It was a pretty bearish market last year, and that was what the data reflected. So this slide is our outlook at organic soybeans. This would have been from last December's outlook, or last November's. And as you can see back then in 2023, we were expecting, we were expecting to see imports declining in markets, especially on the meal import side. We were in a low price environment. We expect that to weigh on imports. I'll warn you, that didn't really happen. We had strong imports out of Africa that kept that steady. And this yellow line, this is our sort of guess at prices. And the dotted yellow lines, these are sort of our failed guesses between myself and my editor. So we thought, if you were to ask me a year ago, I would have said markets were low. But then they went even lower than we expected. That was our outlook. You might have seen $24 bean. Then we thought maybe a $22 bean. Well, now we are at, our current Midwest price is sub $20. So we had this really bearish market where we had these long supplies. You can see the emergence of this orange bar. That's our beginning stock. So we had this market that was oversupplied, that was carrying these long stocks, was weighing heavily in the market. And then combined with really strong imports, we were just in a really bearish position on the soy market. All right, then on the organic corn side of things, it's going to be a very similar outlook. Corn, obviously, is a much more domestically produced crop, so you're going to see a lot more of that nice gray bar. But as you can see, I think, again, the kind of thing to note, maybe my admission, people always ask me what I got wrong, which is always very good for me to think about. We would have thought 2 years ago, I would have told you we'd be looking at, $8.50 corn, then maybe $7.50 corn, and now corn prices in the Midwest. Back when this was published, we're in the low sixes. Now they may be low in the mid sixes. So again, we had this really strong organic corn market. Organic corn production. We had these really consistent production numbers, and this is a result weighed on the market. So basically, what I'm saying is, if you came here a year ago, I would have given you the bad news that you're in a bearish market. It looked like you was going to stay bearish, but now hopefully I can provide at least scenarios in which we could be looking at a more bullish outlook in the near future. Yeah. There we go. Apologies. So I'm going to start by a brief discussion on the demand side. So if we look at this data is on the food side of the market. This is data published by our good friends at the OTA on organic food sales. And if you look nominally at U.S. organic food sales, we've been seeing pretty consistent production. We went from, here we're back at $40 billion. Now we're well up into the 60s. Now these are nominal dollars, I will note. So we have, inflationary periods, which gave a boost to that. But the thing in here I want to zoom in on and pull your attention to is this orange line. The orange line is going to read out sales of organic share of total food sales. And we include both food at home and food away from home on this, so percentage of total food sales. And as you can see, back in 2020, we had a nice low spike, and that spike was COVID. With COVID, a lot of people, they stayed home, restaurants closed down, they didn't want to go out, maybe they didn't have money to go out. And organic food is still primarily consumed at the home. I live in a pretty hipstery neighborhood of Minneapolis, and I can say I don't even see organic on menus very often. So a lot of organic is eaten in the home. So as people returned back to restaurants, they started eating out again. We saw this dip back down steadily over the past few years, and by 2023, the most recent year for which data is available, we were back at about 2.5% of food sales, which puts us well back at 2015 numbers. So while organic has seen consistent nominal growth in food sales, greater penetration is going to be needed in the future to continue improving the picture of organic. Okay, sorry, the slides are a little difficult. So on the food side, I want to talk a little bit about the feed side. I especially want to zoom in a little bit on the organic dairy market. The organic dairy market has been in a consistent state of retraction over the past few years. We went from a market that had a lot of strong supply, demand wasn't really there, and when we had the spike in feed prices back in 2020, 2021, a lot of organic dairy farmers looked at good slaughter prices, they looked at paying, looked at $40 soybean, $12 corn, and they said, I'm going to get out of this. I know a lot of older operators who probably would have retired maybe by now anyway, got out early. And as a result, we've been in an area of consistent retraction in the dairy industry. Now, despite that, we have seen some growth on the demand side. As was mentioned, I used to work in the conventional dairy space, and back there, if someone told me there was 6% gain over year on fluid milk sales, everyone there would be cheering. Or at least in organic, you guys are seeing some growth in food sales. We had organic fluid milk sales exceeding $191 million in 2023 for 6% total growth. Yogurt's up, but then in some of these other areas of organic, we've had much more. We've had a lot more, it's been a lot slower. We haven't seen the sort of strong growth. Cheese, ice cream if in flat, and butter, cottage cheese, and sour cream. I was still kind of catching up to that COVID boom year 2020. So we're seeing some growth, but it's been kind of inconsistent. Now, after these retractions, we expect that the picture for that market is going to change. I speak to a lot of organic dairy co-ops as part of my job, and the consistent story I hear from people who are buying that milk is that they just can't get enough of it. Everyone is out there competing for farmers or competing for milk volume. And especially in an area with a lower feed price environment, we expect that we'll see a return to expansion in the dairy industry. And that could be a good sign for all of you who are out there producing corn and soybeans. Hopefully we could see some growth in feed demand that could help strengthen the industry. Now that's going to be my brief look at demand. I want to move on next so now I'm going to move on to discussing the good stuff, the commodities that you're all growing now. I like to start with demand because not much use growing corn and soy if no one's going to buy it. But now I'm moving to discussion of the market. I'm just looking at a discussion. We're going to start with soy. I'll move on to corn next. And then, as I said, I hope we'll have some time for questions. So the organic soy market in the U.S. is heavily supplied by imports. It varies by year, but you can say on the average year, about 2/3 to 75% of the organic soy that is fed to cattle and poultry and other livestock in the United States is coming from outside of the country. Even as we've seen growth in acres, the U.S. has not been able to meet its own demand, and as a result, the U.S. soy industry is heavily reliant on imports. Now, that exposes us to a lot of international risk. A couple of things on the slide I'll put you into. So the chart on your left over there is looking at overall changes in the soy imports. The bushels are in terms of bean equivalent, so think of the meal imports as being the equivalent of how many beans it would take to produce that meal. And you can see in 2023-24, we had despite having really low prices, we actually ended up in a market where meal imports exceeded the prior year, moving from 15.8 to 17.8 million bushels worth of organic soybean meal. Quite strong growth. And at the same time, we had a little bit of a traction on whole soybeans, but that really strong import picture that we had over the 2023-24 marketing year, that was why I would say our outlook on prices maybe undershot the bearishness of the market, as we didn't expect this sort of consistent imports. Now, the question is, of course, where are these imports coming out of? And we've seen some changes in U.S. sources over the past few years. So if you look back at 2020-21, you see that nice mint greenish color, and that's India. India used to be our main supplier of organic soy, and it was because there was a bit of a good arrangement. India has a really strong market for organic soybean oil. The U.S. does not. The U.S. organic soybean oil market has quite poor demand, from what I hear from my trading contacts. But we wanted the meal, so it was a good deal for India, where they would keep the oil, we would get the meal. Now, the Department of Commerce apparently saw something hinky with the numbers and investigated and determined that India was illegally subsidizing the soybean meal crush. And as a result, every exporter from India to the United States got a big stack of paperwork they had to fill out, essentially establishing, what's your cost of production, what's your cost of processing. And a lot of these guys, for whom the U.S. was a relatively small customer, said, they weren't going to bother with this big stack of paperwork. And as a result, some of these exports of soybean meal to the United States are tariffed at over 200%. Now, if you did all the paperwork properly, which I'm not an expert in trade paperwork, but it seems like it was quite a stack, then it would be a little bit more reasonable, like a 10% tariff. But that alone was enough to really push India out of the market. We went from receiving 16.8 million bushels, and like I said, combined bean and meal imports, to just 4.5 million the next year. And it's continued to attract since. We had just 1 million bushels last marketing year, and we expect to move below that. Now, with India falling out of the market, new players have had to step in to fill that demand. At first, the main player that stepped in was the Black Sea, especially Turkey. Turkey has continued to be a supplier of organic soybean meal to the United States. And you could see, nice jump there, nice jump from exports out of Canada to the United States. And that filled our demand at first. But the Black Sea has their own problems. Obviously, the Black Sea is an ongoing conflict that can make moving products in and out of the country pretty unreliable. And then we can see the emergence of this nice lighter blue here, the dark horse, that went from exporting less than 500,000 bushels of soy products to the United States in 2020-21 to 10.8 million bushels, and that's Africa. Africa has been able really to step in and fill the U.S. demand, and we've been seeing consistent exports out of African countries, Togo, Ghana, and Ethiopia, in the United States. It used to be that we were receiving primarily beans out of those regions, but there's been a strong effort by exporters in the region to increase their domestic crush capacity, so now we're receiving a lot of meal out of that region. In 2023, 2024, like I said, we had expected meal imports to decline, but just on the back of those imports out of Africa, we actually saw a 4% expansion in soybean meal despite the low prices. And that puts us to where we are now. But now, as we look forward into the 24-25 and 25-26 marketing year, the new import situation exposes us to new risks. One that I have listed there is the NOP directive. Late last year, the NOP put out a statement that increased scrutiny on imports of organic soy out of West Africa. They said that there had been questions raised about the legitimacy of said product, and as a result, they increased the scrutiny. They required increased inspections, they required more paperwork, and as part of that, they required all certifiers to submit documentation, essentially explaining what sort of surveillance they were doing to ensure that this organic soy out of Africa was legitimately organic product. So that's left a lot of people thinking this is almost a bit of a warning shot. This was the NOP stepping in and telling to these African exporters, things are a little hinky. You guys got to get things under. You guys have to step up and make sure that you guys are doing proper enforcement. So we expect that there could be a risk of further increased scrutiny and enforcement on imports out of Africa, which could then start weighing on these volumes if it starts to become, paperwork starts to become a bit cumbersome. The other aspect, which I'll touch on a bit more in detail, I'll sort of be woven throughout the slides, it's kind of the big news right now, is the tariff situation. We have a new administration, and the new administration has indicated that they intend to put large tariffs on some U.S. trade partners. Now, a 10% tariff on Africa would be something to keep an eye on, but then one thing that I really to keep in mind has been that now we have, according to President Trump, we're going to have a 25% tariff on imports out of Canada as early as the 1st, like a week from today. And this has much more of a potential to be an impact on U.S. markets. Now, I spoke on kind of U.S. importing soy right out of Africa, but in addition to that, we've seen the emergence of what my boss termed, I'll give him credit, what my boss termed the Canada-Africa-U.S. triangle, which is that in addition to Africa exporting soybean meal directly to us in the United States, they've been exporting beans to Canada, which are then milled in Canada and exported to the United States. The way that trade data works, I'm an economist, so you hear me talk about data a lot. The way that trade data works is if you take a soybean into Canada and you mill it in Canada, it becomes Canadian soybean meal. It becomes impossible to determine from trade data, if that meal was made out of Canadian soybeans or African soybeans. So I want to draw your attention to this chart on the left here, a couple different bars here. The green and yellow bars look at supply of soy in Canada, how much they're produced, as well as their imports out of Africa. That nice dark green, which as you can see is in significant expansion, and then yellow indicating imports out of other regions. And then if you look at these blue lines, these are Canadian exports of soy. And as you can see, back here in 2020-21, production in Canada exceeded exports, which would make sense. Well, now we're at a point, as you look in the 22-23, where Canada is not producing enough beans to fill all their soybean meal exports. And that has been because they've set up a nice situation where Canada, who have lower grain inspection standards than the United States, have been able to import organic soybeans directly into Canada. They're milled in Canada and then export to the United States as Canadian organic soybean meal. So when we look at, say, a 25% tariff on Canada, we look at the potential of seeing, 4.1 million bushels of soy meal exports becoming price uncompetitive on the U.S. market, which could be bullish for domestic prices, though at this point the U.S. does continue to have supplies available from other regions. So it's not like we're just going to suddenly lose 4.1 million bushels. We'll see it moved around a little bit. Now, I've been speaking of Africa in generalities as a region, but obviously Africa is a continent. So I maybe wanted to zoom in briefly that when we were importing from India, we were exposed to a lot of risks because it was a single country that was going to be our major trading partner. And all it took was, say, an investigation in anti-dumping, like what happened, or a weather shock to the Indian crop, and that would be a big hit to U.S. markets. Now, instead of importing from one country to feed a lot of demand, we have it spread out across a couple different countries. The yellow there is Togo. They're the big boy in terms of African soybean exports. A lot of these is West Africa countries. Benin, I'll admit, I didn't know Benin. I couldn't have pointed out Benin on a map until I started this job. But Benin is a big supplier out there in West Nigeria. But then we also have Ethiopia out in East Africa. So we have the U.S. market has a bit more insulation from potential tariffs or other situations because, say, if Department of Commerce investigates and determines that Togo is doing something questionable, well, then we can import from these other regions. So it gives us a bit of more insulation from the market trends of a single country now that we're importing from a half dozen African nations. Now, to wrap up my discussion on imports here, I want to draw attention to prices. I'll try and explain this chart on the apologies, one slide back. All right, there we go. So now we're looking at, we have this black bar here. This is going to be our delivered price as reported by Argus for soybeans in the Midwest, Corn Belt delivered, so right here in this region. The nice dotted line here is going to be our implied crush price. So we take the price of meal, we take the price of oil, and we can sort of back out what a fair bean price is. And you can see we've consistently over the past 6 to 9 months had a market where the bean is less valuable than the things you can make out of it. So we've been seeing this kind of depressed market. A lot of this has been because of difficulties crushing. You're competing with these imports. You're also attempting to crush into a market where the main byproduct, or the other byproduct, organic soybean oil, is very hard to sell. I talked to a lot of crushers, and I hear consistently for them that they can sell the meal. They can sell meal on spot as much as they want, but then someone's got to deal with the oil, and that's been a weigh on the U.S. market. Now, as we look at kind of the market risks later, risks and imports, mention of tariffs, that's about 4 million bushels of supply out of Canada. NOP risks a further 9 million bushels with scrutiny and enforcement on imports out of Africa. And that alone is going to be about half of U.S. organic soy imports. So we have two major regions that now have significant risk that could be introduced over the next year. Now, if we assume this full 25% tariff goes into effect in Canada and is a long-term trend, which, there is still time for negotiations, or the rate could be lower, it's hard to tell at this point. But if you were to assume a full impact of this on the market, that would be enough to add about $5 to the price. And that's that little yellow line you see there, which puts implied crush at nearly $9 per bushel over current values. Now, I think the consensus among myself and my colleagues is that even if we have a tariff, the U.S. soy market has the ability to readjust by finding other sources. So we're not going to see that full tariff pricing in the market. So tariff risk, here it says likely minimal. These slides are a few weeks old. I would say that risk is higher now. It's been hard to tell with the incoming administration. Lots of imports out of Africa, likely to be limited. Like I said, there was the SOE, there was increased enforcement action this past year, and has not had a significant increase of impact on imports out of Africa at this time. We have actually, maybe just to give you guys some relevant market detail, these first couple months of the marketing year have seen lower imports out of Africa, but that has been because they had a late harvest this year. So the crushers there are still kind of catching up. So supplies that you would normally see start to ship out of Africa in November, December are just starting to ship now. So it's a bit of a delayed market, but Africa continues to look to be a consistent supplier over the next year. Imports are going to be likely to constrict over the next year, but certainly not enough to add $49. I would say our estimate is that if we see full tariffs, we could be adding a couple bucks to the U.S. domestic market, but not enough to push it all the way back up to that yellow line. I would say that's an unrealistic price at current market dynamics. All right, so with the U.S. market, soy market being so dependent on imports, I always kind of focus in on that side, but it is important to talk about domestic production. This is a chart I like. This is sort of my one chart to show the soybean market. The bars in the rear, the orange and the gray bars, those are going to be your supply. Beginning to carry over stocks in orange, U.S. production in that dark gray, and then light gray for imports. And then in the front there, we have demand, both feed use through crush and food use. And one aspect to note, so 2020, 2021, this is when we have a $35, $40 soybean priced in, as we had the loss of supply out of Africa. We had COVID supply chain interruptions, and this pushed up prices, and we saw farmers increase acreage in an attempt to take advantage of these high prices, and who can blame them? But as a result of that, paired with strong acreage compared with strong imports, we've seen the emergence of a consistent long supply position in the market. We went from a market where by the time you got to harvest, most of your organic soybeans are going to be used up, to a market where we have a consistent oversupply of soy sitting on the U.S. market. And that's what's indicated in that orange. And that has been the real bearish force on the market. As long as there's excess, there's little need for end users to buy out 6 to 9 months. They know they can get what they want, and this has been a depression on the market. And even as we've started to see this contract a little bit, it is not yet contracted enough to really strengthen the market. So this is why your soybean price is so low. If I had to put it in one chart. But now to wrap up soybeans. So where does this take us? I always try and give a little bit of a future orientation. You'll note this chart here is very similar to one we had before. Market continues to seek reduced stocks. We did not see a retraction in imports last year as a result of strong imports out of Africa, but we expect that we could see imports trimmed this year just as a result of low prices and strong domestic availability. The 2024 harvest in the U.S. was down 7% in terms of bushels, off of an 8% decline in acreage. That 1% difference is going to come out of a slight improvement in yield. And then carryover stocks are going to remain elevated as a result of the strong meal imports. In 23-24, meal imports of Africa more than doubled. They significantly increased their crush capacity in the region. The U.S. buyers were happy to buy it, and as a result, we saw a lot of hit in the market and continue to add to an already long supply position. So 23-24, we didn't see the brakes hit enough again. This has been kind of 2 years where we thought there would be 2 straight years where we thought there would be more of a decline in imports. But as moving to 24-25, the question is that our current low price is going to be enough to return the market to a normal status. Will we see enough retraction? Well, we'd have to see both a retraction in acres as well as a retraction in imports for the U.S. organic soy market to really return to strong bullish footing. But if we do see, say a 25% tariff on Canadian imports out of Canada become a long-term thing, if we see a retraction in acres in this coming planting, which is what we're forecasting, we could start to see a market that tightens up this orange beginning stock position and can return to a more bullish or at least a more stable long-term outlook. All right, so that wraps up my little look at soy. I'm going to move to a discussion on corn. Now, while soy is primarily imported into the United States on the organic side, organic corn is going to be primarily domestic produced. It'll vary by year, but assume that, say, 70 to 80% of our organic corn demand is going to be met by domestic product, leaving, just a little bit to be filled by international production. But it's still important to zoom in on this. It still has an impact on the market. Now, so in 23-24, we had been expecting to see a good bite out of the market. Corn prices were incredibly low. It was hard to see a lot of profitability in importing. But I can remember the day this happened. In October, we were working on our September import forecast, and there was a nice 48,500 metric tons of organic whole corn imported out of Turkey. We do not import whole corn out of Turkey, organic whole corn out of Turkey. It was an incredibly rare status that, from having spoken to people in the region, was a result of limited changes to export regulations in Turkey. Basically, Turkey normally tries to keep their corn internal, but their government looked around and said, we just have too much corn, we have to get rid of it. So they had temporary cuts to export duties. The corn was available, so we saw a significant glut push in the United States. So if that corn import, which is unlikely to repeat, hadn't happened, I would say my import predictions would have been pretty close to accurate. But instead, in 23-24, we only looked at a 7% retraction on imports. So a little bit of a tap on the brakes, but not enough to really stabilize the market. Now, as looking at 24-25, importing corn out of Turkey, who are a major supplier of cracked corn, and that cracked corn out of Turkey, similar to how I explained meal out of Canada later, in that it's crushed corn from Turkey, but made with corn from a variety of sources in the region. We expect, because it's just so hard for that corn to be profitable when competing with available U.S. corn, that we could see a much bigger cut, maybe as high of a quarter, in organic corn imports in 24-25. Not enough to fully tighten the market, but enough to weigh on some of these long supply positions that we see. So, as I warned you earlier, I'm an economist by training, so I'm going to have to stop again to give a little diatribe on some data. So we put out twice a year our organic acreage outlook, and we use estimates, and we use information from certifiers as well as from the Organic Integrity Database to put that together. Last year, our friends at the OID, as a result of SOE, began publishing farm-level acreage on the database. You can go online, you can look up your neighbor's farm, if they're an organic certified farm, and you can see how many acres they're producing. And with that improvement in data, we made some adjustments to our estimates. So you look here and you see this 20,000 acre increase between years. We do not believe that in the 2024 harvest really had 20,000 more acres. Our estimates were 20,000 higher, but this was a result of greater data availability. I can say, for example, the number of organic farms producing corn fell 7% between 2023 and 2024. So we did see retraction in acres, even if it's kind of hard to tell with the data we have here. It's hard for us to go back. But maybe the thing I want to zoom in on here, now that I've discussed the data, is, again, the orange bar. The orange bar is something I like to talk about a lot. Again, we had a market that we saw strong acreage increases in those past couple of years in 2021, 22, 23. And as a result, this pushed a long supply into the market. The organic corn market went from being pretty tightly balanced to a position where now we expect a consistent stock position to remain sitting in the market. Now, our estimates do expect that maybe by the end of 25, 26, we could be looking at a much tighter market. But when you have a domestically driven market like organic corn, it becomes a little bit more difficult to balance the market back out once you get lawn. With soy, if I want to balance the market, I think of it in terms of levers. The import lever is one you can turn every month. I can the market, the invisible hand, if you will determine every month how much soy to be imported. Well, when you have a domestically driven market, the lever of domestic production is one you can really only move once per year. So once you're in this lawn position, it becomes a lot harder to get out. We have to see losses in imports, but also see retraction in corn acres for the market to return to balance. Now, there's maybe reason to expect a retraction in corn acres. This is data taken from Finbin at my alma mater, the University of Minnesota, looking at profitability of corn. And I want to zoom in here that costs of producing corn have increased over the past few years. And I'm sure this is no shock to anyone here in a high inflation environment. Costs have increased, cost of labor especially has increased. And at the same time, we've seen a retraction on prices. Organic corn and soybean prices are both down. And over here, these kind of last three columns are kind of outlooks and potential scenarios. And you can see if current cost trends continue, we're looking at a market where a standard organic corn, soy, wheat rotation becomes unprofitable. You're only making a little bit of money on soybeans, losing money on everything else. If we look at prices to recover, say $9.50 corn, $25 soybean, right here in the Midwest, which is, I would say, in the realm possibility, but maybe high. Well, then we can see maybe a bit of more profitable market. But the real thing to zoom in here is that we've reached a market where it's harder to produce organic corn profitably. And we hope that, absent a strong return in corn prices, and I would say we're in a bit of a bullish moment in corn prices as end users try to get farmers to open up their bins. The market prices still remain overall depressed. This will make as long as acres remain, it'll be hard for the market to bring itself back to balance. So this is basically the same chart as I had for soy, but this is the corn version of it, so just a little bit different. And the story you can see is pretty different, that the U.S. is just in a net supply position when it comes to organic corn. These nice orange stock bars have become a consistent weight on the market, and it's going to take some time for this market to ease itself out. It'll take several years of losses in imports, maybe some trimming domestic acres to bring this market into balance. But you can see this low gap here, 25-26, we think it's possible this could be reached in the next few years, assuming that we do see the sort of retraction on imports and acreage that we're expecting. And this will be my last slide. So where does this leave markets? Prices start 24-25 low. Prices in the Midwest, at least when we published this, were sub $7. I know from having spoken with traders that if you're trying to buy corn in the Midwest, it's going to be high sixes at this point to get a farm to open their bins. But still, prices below historical levels. 2024 production was up, but as I explained, that was a result of data changes. And we saw just a little bit of a trim on imports, which really meant that 23-24 was able to do very little in terms of reducing this lawn supply in the market. But now we have an organic market where organic dairy is returning. Organic poultry is maybe a little bit more up in the air. We continue to have, import impacts from from bird flu. So we've seen I would say organic has had less of an impact than conventional markets have, but we have seen organic flocks culled, and there's the risk of more. So that maybe is another question as we talk about food demand in the future. Imports matter less every year. Like I said, the U.S. is at the point where we're pretty close to self-sufficient on organic corn production. The corn that we import is much more of a balancing exercise than it is really unnecessary to feed the market. It's because for some East Coast buyers, it's going to be cheaper to pull corn in from Turkey than to pull corn in from domestic production centers in the U.S. Midwest. But as we look forward, demand is going to be the key. Since we continue to have production, since we only can trim so much out of imports, we are going to have to see a return in corn demand for this market to bring itself back into bullish status, which honestly I don't expect to strongly return until well into the next marketing year. And that takes me to the end of my slides. I want to end with a brief bit of self-promotion. I put out a weekly newsletter on this market. I put together these outlooks on this market. And the reason myself and my colleagues are able to is that we speak to a wide network of participants throughout the organic industry. We speak to farmers, buyers, end users, importers, exporters to get their impact on the market. So if the things I talked about for the last 30-something minutes are interesting to you, if you want someone to call up and ask what's going on in the organic corn and soy market, there's my email, there's my phone number, I have business cards. I'm always happy to talk markets. So if you want to, chat monthly and get my outlook and thoughts on how this outlook has changed, feel free to reach out. I always love talking to people in the industry. But that takes me to the end of my slides. I would now hopefully like to open it up for questions and hear what you guys want to know.
I have a question at corn. Does the domestic corn production, how does it compare to the conventional non-organic corn production, and its geographic range, and how it's susceptibility to drought or donated for?
It's definitely a little more concentrated in the Midwest, maybe even more so than, it's more concentrated in the Corn Belt, even more so than domestic corn. So we do have a lot of risk that if we had, say, a big hit to, Minnesota, Iowa, the Dakotas, that alone could be a big hit to the market. For example, this past harvest, the East Coast organic corn harvest came in below expectations, and that left that market needing to buy organic corn from somewhere, and they've been pulling from the Midwest. So we're a little bit more exposed just because of that concentration. And we do actually publish organic drought estimates as part of our data.
So less exposed to Western droughts.
Less exposed to Western droughts.
Concentrated in one spot.
Exactly. It's all concentrated in kind of that nice upper Midwest Corn Belt area, the states around here.
This is probably a really naive question, but it looks to me like the demand for organics went down as the consumer inflation stuff went up. So people have less money to buy groceries with, and they're making cheaper decisions. I can relate to that. Mm-hmm. So given the glut of supply, why aren't organic consumer level prices coming down in response to the glut of supply, and are middlemen or processors just running away with the show, and then it's really hurting farmers' ability to stay in business on the organic production side?
It's true that I would say we have had demand definitely at least stagnate, and I think switching is definitely a factor of that. I'll admit I no longer buy the nice organic eggs at the grocery store. I buy the cheaper ones, just so pretty expensive. I would say the people who have made the money on the margins have primarily been a bit longer. It's been, say, your poultry producers who have long-term, but it's not, I would say it's anything bad. It was more just that they have long-term contracts or prices with the retailers that have kept kind of their prices stable. So we've seen a glut of production in terms of these feed commodities, but not maybe as much in the end user products that you're going to be eating. Maybe that's where it's lost, is that commodity markets feed into that, but it's only one aspect feeding into, say, the price of chicken on the grocery store, which has remained admittedly fairly stable even as feed prices have come down.
Okay.
I would argue that we had built a sort of a moat for organic to be priced in through non-fungibility, whether domestic or international. But for commoditization, is there any reason that organics won't seek cost of production plus IRR, which is what conventional commodities do?
I suspect that would be a long-term trend in the market. Organic has definitely grown steadily over the past few years, and I would say, yeah, eventually it'll return. I know at this point, most of the organic farmers I talk to are still kind of happy with their returns. But yeah, as it continues to expand, now expansion of organic is much more difficult, so it would take a while to get there. I think it becomes hard for supply to meet demand, just because if there's a bunch more demand for organic soy, you got to put those acres through. It becomes a 3-year process. So I think the kind of the bureaucratic certification aspect has been what separated it. But in the long-term trend, I think that's where the market will go if it continues to grow at steady rates.
Could you speak a little bit about the market for organic wheat and maybe other organic small grains or dry beans?
I'll admit that's not my area of expertise. We have a colleague on that. But from what I've heard from my colleague Rachel Nelson, who is a big expert on these things, is that the wheat market has been kind of suppressed in terms of demand. At least it was for a while. We had, say, I talked to organic farmers 6 months ago who were selling their organic wheat in the conventional markets because there was no premium. But now there's a demand for that organic wheat that's no longer in the organic market, and there's kind of a scramble to meet that. We're definitely much more of a domestically driven market. I know Canada has had the wheat market had a strain of poor harvests. We had like 3 or 4 years where it's just poor harvest after poor harvest, especially up in Canada that produces a lot. Now that's stabilized a little bit. The last few harvests have been much better, so that market has definitely been stabilizing. But there's also been a source of steady imports of flour, organic flour, out of Europe that has weighed on demand. On other small grains, I would admit my expertise kind of ends there. But if you want to get in contact with our food grade person, I can get you in contact with her.
Alexander, speak to your corn price discovery. I appreciated your report. You give regional kind of breakdowns on the organic corn. Is that speaking directly with buyers? What's your price discovery method?
Sure. So for organic corn, and for organic soy as well, we have contacts throughout the industry, everyone from farmers to end users who provide us with their contracting data. I have a number of people who send me every week or two how much corn they bought, how much they bought it for, and then using that, those prices are our primary input. And then we have a system of algorithms that looks at, if I'm looking at, say, the price of corn in Minnesota, the algorithm looks at if we have Minnesota data, uses that price, but otherwise it'll use movements in other related states and historical connections. So maybe the price in Iowa and Wisconsin to do that. So we put out a weekly price. But yeah, much of the data comes from, we have buyers, farmers, brokers who directly send us the contracting data. So those prices are based on real contracts, so I'm trying to say.
I call it the power and turkey for direct mechanism that will prevent that's up there to the east, west, to the state.
Well, Turkey definitely has like long-term supply chain setup. That would be difficult to move. They have long-term the exporters they have long-term arrangements. But yeah, theoretically, as long as the demand remains in the U.S., even if we cut off that source, it would probably just move somewhere else. Much like we saw in soy, where we cut off India, but it didn't really it was cut to imports for a few years. But obviously, someone else was going to step in.
Hello, my question is pertaining to futures markets. Is there a futures markets in import and exporting side of goods? That people can maybe either speculate on some of those prices, or can you call me up or put me down? And if so, is there some on the domestic market for doing that for just on the organic side?
I do not believe there are currently any organic futures markets. I know that us at Argus have been in discussions with CME in the past about launching domestic organic contracts, but I don't have any sense of the progress on that. That's outside of my department. But it's something that's being worked on. That's what at least I can tell you.
And where export that?
Nothing. I've never heard of anything. Most of the people out there, if they are going to hedge, are going to try and hedge off conventional, but hedging organic off conventional is a risky venture.
No elevators can't zero hedge.
There's not a futures market to hedge it into. So, I mean, most of the hedging that's done organically can be done through physical hedging by purchasing when you think prices are low, selling when you think prices are high. There's not currently a nice way to hedge the way there was, the way that there would be. And I used to do risk management. So I remember in the dairy sector, when we produced cheese, we were hedging on the other side. You currently can't do it in organic, but something we'd like to launch.
Yeah, no.
I was always told the organic to conventional ratio was about 2 to 1. Is there a lot of fluctuations off of that? Is it relatively stable, 2 to 1?
It's pretty unstable. What I've explained to you is it works except when you need it to. So like when prices are stable, it'll be pretty close to that. But when either price gets volatile, it breaks down very quickly. So I'm not your hedger, but hedging is a risky venture because when either markets are volatile, that basics can break down very quickly. That's maybe a good rule of thumb, but I wouldn't use it past that.
Nothing over the counter.
Not that I'm familiar with at this point. I think there are a few companies that do some over-the-counter contracts, but those volumes are very limited. There's one company called Stable that I know has done some in the past. And I think another company or two has, but I know that they've had difficulties reinsuring that in the reinsurance market. So like the volumes they can do it for are pretty small. All right. Thank you, and I'll be around for a little bit. So if you want a business card or want to say hello, I'll be around. It was great speaking with everyone. Have a great day.
Thanks so much, Alexander. Again, I use Argus's data, and it's really limited out there in the organic marketplace. So what you do is really important, and we appreciate it. Yeah, thank you. All right, up next, we're going to hear from some other people who have a really important place in the organic marketplace and hear a little bit more about buyer perspectives for organic sourcing. So many of you may be familiar with John Wepking, who we'll invite up first. He's co-owner of Meadowlark Organics and Meadowlark Community Mill, a diversified farm and on-farm stone ground flour mill in Ridgeway, Wisconsin. Together with his wife, Hallie, and their team of farmers and millers, they farm around 1,000 certified organic acres with crops and grass-fed cattle, purchase milling grain from other organic farmers in the Driftless area, and produce and distribute thousands of pounds of flour weekly. They are passionate about creating direct, value-added markets for grain, helping farmers to maximize their profitability and keep the grains they grow within their local economy and food shed. John, come on up. Thanks.
Hi there. That was a really thorough introduction, so I can jump right in. That's nice. Yeah, so I'm up here as a grain buyer, which is a little bit of a half-truth in that, we mill, in 2023, we crossed 1 million pounds of wheat run through the flour mill threshold. We were probably 1.25 million in 2024. Sounds like a lot. It's like 20 semi-loads. So it's not a tremendous amount of grain. We supply about half the grain for the mill, and we buy from mostly our neighbors and friends, our other organic farmers in the Driftless that manage grounds similar to us and do a lot of the same practices and that we try to help support. On that buying side, this is the caveat part. So we are consistently paying $1.50 per point of protein on hard red wheat, organic hard red wheat, that meets vomit toxin spec and falling number spec for good quality milling. That's a really good price compared to where the market is right now. But the caveat is also, 8 or 10 semi-loads a year total out of everybody in the room. So, but there are other mills like us. I know the Wilkins at Janie's Mill have managed to maintain consistent grain buying prices despite the fact that the organic commodity markets have gone considerably lower. And I think the takeaway for me on that is that, and I don't know, I've been, a lot of this stuff has been weighing pretty heavy on me, and thinking about, saying, okay, I'm gonna make a quick segue. How many here went up to the Capitol building and to the rotunda and walked around? Nobody. Everybody go do that. It's open, it's a public building, it's a civic cathedral. It'll make you feel good about being an American and the positive things that we can do when we come together. It is one of the coolest buildings I've ever seen, and it's free and it's ours. And inside it, there's one bust. I don't know, I'm gonna get so worked up about this. There's one bust, and it's Bob La Follette. And he ran for president in 1924, and he got 17% of the vote. Basically on the backs of farmers that were fed up with corporate consolidation in agriculture. And there was no organics then. Every farmer was organic then, right? So at that point, as is the case now, and I think is a lot of the lesson, is that organics, I think, way before my time, when the farmers in the 80s and the 90s laid the foundation for what we have today. We're farming because they created a new system, and they went to the USDA and said, please regulate us in order to get a fair price for their products and to have a consumer demand for what they were doing that was separate. But at its core, I think it was intended to be a non-commodity system. It was intended to be a more human-scale agricultural system. And so I think that even though the small data points of the small stone mills like us in the area don't really amount to a hill of beans if you have 10,000 bushels of hard red wheat to sell, because I can't buy it, I think the larger message and what we've been trying to do, we're also in the driftless area, so there's a lot of organic farms, and we're in a very privileged place because there's a lot of consumers near us. You know, we're 45 minutes from Madison. We've got Northeast Iowa with a lot of people, and we deliver into Madison, Milwaukee, Chicago, send stuff up to the Twin Cities. So we're very privileged in that, and we have a community of organic growers around us. Not all of us have that, but you know, it's allowed us to pursue selling the majority of our grain that goes off the farm, not by the semi-load, but directly to end users. And I think that there's a lot of opportunity for all of us in our own communities to find ways to be creative. We had farmers there's a lot of small scale, like fair to finish hog producers in our area around Dane County that want soy-free feed. And I can't actually go into I don't know why. I should know this. Consumers are demanding it. I don't know why. But we've started as a way, and I don't like growing organic soybeans in the driftless. It's, you know, a lot of blood, sweat, and tears for 45 bushel beans, and half the time we don't get that. So this last year we grew a cold season mix of peas, oats, barley, and flax in a succotash, and swathed it and combined it and put it in a bin. And I have 2 or 3 farmers that tried it, and they like it for their pigs. It's 17% protein right off the combine, and you can grind it and feed it. And now I've got 4 or 5 farmers interested, so now I can go next year from 40 acres of that to 150 acres of that. And it's like a cover crop that I get to harvest and then plant another cover crop. And probably enough seed's gonna fall on the ground, I just have to disc it and I'll get a whole new crop of peas. So just in this moment of like low prices, I think what it reinforces for me is just to try to find that like human scale, community scale element and build those relationships and work with your neighbors and try to, we obviously for organic to grow on a national level, we need the commodity markets. It's the core, you know. A lot of our farm's profitability is based on a lot of bushels of organic corn and soybeans. We need that. But in terms of like in that last chart, I think you had a break-even price of like over $12 a bushel on wheat. That's bananas. I mean, if you look at it over the whole rotation, I'm sure, you know, it's not as, that was twice that of what the price was. You know, you're not going to recover that with that one crop in a feed market. But I think my perspective is, yeah, that it's a good lesson in figuring out how we can work together and support each other and keep the stuff that we grow in our own communities so that we can really maximize the amount of the income off of these food products that's coming back to the farmers that are growing the products. So, and then the last bit, because I know I'm queuing up Elia, that I just want to say, if you guys haven't noticed, I'm kind of an idealist, is that I do think that one way that we can all support each other organically in these moments of low commodity prices, though it probably seems counterintuitive in the landscape of tightening belts and lower profit margins, but it seems doubly important that we all support our organic seed producers and buy the organic seed that's available instead of the conventional untreated, because there's good varieties out there, and the more we demand it, the better the varieties will get. So that's my preachy bit, and I'm sorry if that came across as a bit much, but I know Elia's talking after me, and I thought that would be a good softball for him. So thanks, y'all.
Does anyone have any questions for John? We can take 2 or 3 questions.
I have high regards for John.
There you go.
Yeah. I think one thing we shouldn't forget is this is the production of healthy food. And I don't hear that advertised enough. You watch sports, you see medications, you see pickup trucks, and you see burgers and pizza advertised. You know, that's what's on the big screen to most Americans, but you don't see us. But as I get older, and you know, there's a lot of gray hairs too, it's you find you gotta eat healthy to stay healthy. And I don't hear this advertised. And that's what John is doing. That's what so many of us was doing. That's what I was trying to do and figure out the way back 15 years ago. And so I would hope that we can find a way to pitch our products as the way to stay healthy. Thank you.
Yeah, one hand down.
So yeah, I had a question in regards to, do you sell any like organic corn, flour, or meal?
We do. It's a we grow about 40 acres a year of 3 different organic open pollinated varieties that we actually have been selecting seed and dialed in. They're very low yielding, but we grind them for polenta and grits and cornmeal and stuff like that. But then, you know, we have 180 acres in the rotation slot, so most of it is just yellow dent that goes into the local feed market. But we have, I wish, you know, we move a lot of wheat flour, bread flour, and all-purpose flour, but corn and buckwheat and dry beans and all the other things are unfortunately a pretty small fraction because they're just not, you know, grits are wonderful. Everyone should eat more grits. Makes good breakfast cereal. Yeah, but so we do grow corn, but it's kind of a specialty thing for that.
This is less of a question for John, although it definitely, I think, just speaks to just the incredible value of what John and Holly and everyone that is part of the team is doing. And not to really trying not to get political, but just trying to also emphasize that there's definitely a discussion of changes, and it's time for it's always time for our communities to make voices known in terms of the impact that policies have on farms and communities. And one policy that I think could be valuable when we look at the importance of regional local supply chains and how that buffers against global commodity prices and also against global shocks is policy related to food as medicine. And I'm not quite in this realm, so I don't want to speak out of turn or misrepresent any information. But for instance, Michigan, their Medicaid program is specifically calling out this issue of food as medicine and local food procurement, even more so than organic, but certainly organic is supported by local food procurement in terms of going into different prescription food menus that are available, as well as looking at how that relates to schools and hospitals. So I think this concept of food as medicine and what we eat impacting health and how that can be supported by different policies and programs that are somewhat already in existence, but maybe need to be tailored. I think back of some of the growth of an organic in Wisconsin and how that on the vegetable side of things, and one of the reasons why we have such strong CSAs was a policy of the reimbursements for community-supported agriculture, and how even decades ago our HMOs were seeing the value of healthy food and how that was a preventative for medicine. So, I mean, just again, not to get political, but I think it's important to voice how these programs have impact and how it helps support our communities and producers and support family farms, small producers, and keeping farmers on the landscape.
I don't know if this is a question that if you have an answer to necessarily, but one of the things that you're talking about is the need to increase processor capacity, especially at a small localized level. And I know that in our organic and more sustainable realm, there are a lot of people with a lot of money trying to throw money to increase this type of agricultural system. And a lot of them have gone towards buying land to then have it transition to organic, but then we still have the issue of production capacity. So I guess, can you speak to how to, and I don't know if this is something you've had to deal with at all, but working with investors and trying to get some of the people with the big money to invest in production facilities and developing that type of a market, because it's a lot harder to show them a cash flow of a business that may or may not take shape as opposed to plunking down a couple million on a piece of land.
Yeah. Oh man. I could talk a long time on that. And yeah, everything we've done so far has been debt financed almost entirely with farm credit, with Compeer. That, as far as the infrastructure side to build the flour mill, and we did it as cheap as you possibly can because we, laid our own pipes for the in-floor heat and did our own plumbing and, all the kind of farmer things you do to cut down the price of a flour mill by half. But that, I think that's huge. And I think that there's an interesting, this is maybe going to be a bit polarizing. A lot of that, the wealth that is accumulated, going back to the La Follette point, and I think what I was trying to hammer home is like the commodity system in 1924 and in 2024 is fundamentally extractive from farmers in rural communities, has been from even before that. So the fact that there is wealth that is well-intentioned enough to try to reinvest in these sorts of projects is really exciting. But I think ideologically that the ROI demands on that money is a bit rich, considering the extractive sources of that wealth. I think, I don't know really where to go with that, but I think that's kind of the next pitch to those folks, is saying, do you really need 8% ROI in 3 years on this? Like, is fighting climate change and funding regenerative agriculture, does it require that ROI? Say what you want about, Carnegie. He built a lot of public libraries for free all over the country, right? At a certain point, like, that investment, farmers need, cheaper to no interest operating lines of credit. And there's the wealth out there that can fund that. And I think that is kind of the next challenge, to try to even put a little dent in that extractive trend, That doesn't answer the question at all, but that's what made me think of. And to close the loop on that La Follette thing, I love this history. There were 25% of the country was farmers at that point. So him getting 17% of the vote, largely on the backs of farmers, like, even if there was a candidate like that right now, what are we, 1%, 1.5%? So to create the kind of change that we need now, that messaging to the consumer, because there just aren't enough farmers left. Like, no one cares about the Iowa caucuses anymore because presidential candidates don't have to talk to farmers anymore because the vote doesn't matter. There aren't enough farmers to make that vote matter. And so, like, we have to find allies and broaden that base of support so that we have enough political capital to do those sorts of things in the future. Not super optimistic, sorry.
Thanks so much, John. I loved the segue, and I love how engaged this audience is. So thank you so much. And up next, we have Elia Romano, who grew up in New England, in Maine and New York, and he went to school on the West Coast. And after that, he moved from Seattle to Albert Lea, Minnesota, and spent his entire professional career working at Albert Lea Seed. So over the past 26 years, he's been involved in almost every aspect of the seed business: production and seed cleaning, operations, sales, and dealer management. He was on the acquisition team for the recent purchase of Blue River Organic Seeds and had the role of integration manager following this purchase. And his tenure in the seed industry has aligned well with the growth of the organic industry. He's grateful to have worked closely with so many organic farmers and innovators during this time. And let's hear from Elia next.
Thank you. That's a tough act to follow. We were talking about some pretty big picture stuff there, so we'll try to, again, our perspective from the seed industry is pretty narrow relative to the grain market. We're not big consumers of grain like grain is for a commodity. So just to qualify my comments, they're going to be very specific to my perspective from the seed industry and from Albert Lee. Like mentioned, my entire professional career has been at one place, Albert Lee Seed. I've been lucky enough to participate in the growth of Albert Lee Seed. And as stated, it's aligned almost perfectly with the growth of organic seed. I came back to Albert Lee in 1998, which happens to be the first year that we produced organic oat seed. So the first year we produced one variety of organic oat seed in 1998 and didn't sell any because there was no reason for anybody to pay a premium for organic oat seed in 1998. But we're kind of slow learners, and we believe in organic agriculture, so we stayed after it. Our goal as a company is to increase availability of organic seed across species and varieties and to make sure that the playing field is even. So when we're bringing a variety to market for organic seed, it is on par or better than anything that can be produced by your conventional neighbor. There's a lot of examples of that over the year, but one that my colleague Carl likes to reference a lot is we'll introduce corn and soybean varieties consistently the very same year conventionally and organically. So this year we've got 3 or 4 new corn varieties that are new to Albert Lee, and they're available both organic, Blue River, and conventional Viking non-GMO. And so I think that's really one of our focuses is expanding the availability across lots of species so that there is availability of organic seed across oats and legumes and brassicas, as well as corn, soybeans, wheat, the main commodity ones. But then also when we do bring a variety to the table, that you're starting off on an even playing field from a genetic standpoint, and you've got genetics on your farm that can really compete and yield or stand or disease resistance or whatever it is. And so we are going to continue that trend, and we are very committed to contracting and producing and selling organic seed going forward. All of the organic seed that we contract the majority of it is right here in the upper Midwest. So we're contracting with farmers in this room. And so again, that is a nice closed loop system. When you buy organic seed, you're supporting your neighbors potentially or other organic farmers down the road. It's, the backdrop to all this, and I don't need to tell you, is organic is seeing some lean years now, right? So that's kind of the elephant in the room here. Couple points on that. This is also true for conventional agriculture. So conventional ag is also in a downturn. Everything's cyclical, right? So these things go in circles, and we firmly believe that prices will recover. It's not a matter of if, it's a matter of when. I'm old enough to remember 2007 when organic corn sold for the same price as conventional corn. So we've seen this before, and we firmly believe that, we're in a downturn now, and it will come back up. And I guess the main point is we fundamentally believe in organic agriculture, right? We fundamentally believe that this is a good place to be, and we're happy to hang our hat here because we believe that consumers will continue to demand organic products, and that there will continue to be a demand for organic commodities. And so we are very confident that organic ag is a good place to be, and we're very happy to be here with you.
So can you speak a bit to the opportunities of, talk about diversification and organic grain rotation? Seed production is another way of diversification. Just maybe some thoughts or examples of how producing seed could be part of a grain rotation?
Absolutely. I had about a 20-minute conversation with Willie this morning, who exemplifies this to the nth degree. But also, to John's point, I mean, what you're doing is you're value adding, right? And so you're coming out of that commodity space and you're coming into a value added opportunity space, right? Where the markets are granted much smaller, 20 loads of wheat a year. I don't know how many loads of grain we buy a year, but it's nothing compared to the millers of the world. But diversifying into seed production is a really nice way to add value to your crop. And that can be across, the obvious ones, like the easy ones, like small grains, where it's basically a 1-to-1. You grow a grain, all you got to do is clean it and sell it. Soybeans, open pollinated crops like that, easy, to more complicated things like seed corn production or legume production. Like actually John did some Austrian winter peas for us, right? So if you're willing to invest more time and energy into something that's a little further outside the box, then it's a great opportunity to diversify your markets.
There was multiple hits to the conditioning and processing capacities in the United States. One of the final blows was the consolidation of the family seed businesses in the late 90s. A lot of physical equipment was destroyed, literally burnt and smashed. But is there ever a model where the farmer can be part of production, especially on the inbred corn side, maybe not seeing the full genetic gain on the R&D, but a lot of our acres, it's just a matter of getting seed out there and not genetic gain. And that's, I think, some of the background for open pollinated corn. So can we undo what happened in the 90s with consolidation of ownership of inbreds into something that's more of an open model?
It's going to be pretty hard to roll the clock back on corn specifically. There are certainly good people that are doing work. Walter is in the room somewhere that's doing good work on some unencumbered genetics, I believe. We've got a small breeding program of unencumbered genetics. But corn breeding is really a numbers game. And so you're just at a significant disadvantage relative to the amount of money that's getting put into genetic origination by much larger companies that have much larger pools of genetics to start with. So I think that there is a place for these unencumbered genetics, and where I think that they fit in and why I'm excited about our pool of genetics that we own is that we can start to cross them with some of that stuff that's coming out of major programs. And the genetic pool that we have was very organic specific, was developed with organic farmers in mind. And so you can take some of those value added traits that are specific to organic farmers, mix them with some of these real elite, high yielding, great standing, less filling, great tasting genetics that are coming out of the majors. And you might find some crosses that are really specific to organic that really add value for organic farmers. So that's where I think that the opportunity is to take back. It's not full ownership, but it's giving us something that is unique to us that can add value to farmers. The other thing I heard you say is the consolidation of seed companies, and the D29 cleaners getting put in the woods, which is I think actually a bright spot. I bet there's a lot of people in this room that are starting to dabble in seed cleaning or grain cleaning to value add to your grain. Maybe you're cleaning it so that you've got a higher commodity to sell, or you're cleaning it and you're selling it locally. So I think the low-hanging fruit there is actually on those open pollinated crops, right? Like on the small grains, on the soybeans. You got to be careful because a lot of that stuff is protected, but it's not super complicated to navigate the growing, producing, and selling of a certified oat variety. And so I've been really excited to see those things start to come back to communities, right? Because again, you're talking about adding value to an organic farm and the organic farms in the community. If somebody can grow an oat there, certify it, produce it, pay the breeder, right? Which we fully support and is important because we need oat varieties that have rust resistance, right? And that have test weight. So it's very important to pay that back into the system, but it's not that complicated of a process. And then it keeps it local, then it keeps it in the community. And then you're talking about building up these rural farm communities again and bringing those cleaners back to farms. And we're absolutely seeing a trend there, which is exciting.
Hello, good evening. And my question would be just on some of the pricing models. When I first got into organics, that the cost of seed was probably 20% cheaper than a lot of the conventional counterparts. And I see a lot of that now. I have some friends that sell conventional seed. Of course, I buy organic grains, but I see a lot of that pricing is very similar in model. May I ask what caused that, and how can we try to continue to keep some of the organic grains, a cheaper cost to try to help influence people to plant those varieties as well?
So keeping the price of organic seed down was the question, I think. And I mean, I think it goes back to, the price, to some degree, the systems, the price of the system, right? And then the price to the organic farmer. So that seed does go back to an organic farmer. So you want to get paid more for your grain. You've got a value-added system. It's harder to produce seed under organic systems, be it whatever that system is. Your grain should demand a premium. So I don't think the expectation should be that we can offer organic seed for the same price as conventional seed. I think the bigger thing from my perspective is that we've got really competitive varieties, right? So, if you're not pay more for your seed, the more important thing is does that seed perform when it hits the fields, right? How well is that seed performing, right? Because you can't afford to have a variety that falls down or gets rust or yields less or has lower test weight. Whatever it is, whatever agronomic traits we're looking for in whatever species, that is the biggest single thing for me, whereas the seed cost has gone up, as has a case of eggs or a gallon of fuel or whatever it is, exponentially over the course of the last 15 years. But for me, it's more about the value add at the back side of that than trying to get the cost down as low as possible on the front side. And the reason it's higher on the front side is, frankly, it's more expensive to produce organic seed. Whether you're growing organic hybrid seed corn under organic management and not using fungicides and not using insecticides, or you're growing organic legumes and you're dealing with lygus bug. I mean, there's a host of issues across every different species you would produce organically relative to conventionally, and the system is just, there's a cost associated with that system, and there's a premium that we're very happy to pay our growers to buy that grain out of that system.
Great. Thanks so much, Elia.
Thank you.
Thanks.